Well, it's certainly been an interesting couple of days for global markets following the downgrading of US government debt by Standard & Poor's over the weekend. And all focus was on the New Zealand equity markets on Monday to try and see exactly what impact and what reaction we were going to see. So we did see a lot of international investors logging on to see what was happening back here at home in New Zealand. And initially, the reaction wasn't too bad. New Zealand equities were down around 2.7%, which in context isn't such a major fall. But we've seen the big heavy hitters come on overnight, and looking at some of the US exchanges, they have really been hammered. The S&P 500, for instance, is down around 6.5% to 7%, and this caps off a pretty bad run over the past 3 days, where that particular index has lost around 11% in total. So equity markets have been beaten up a lot by international investors, and it is likely that until the dust settles in a couple of days' time, we're going to see further volatility and potentially even further drops in equities. Well, I guess the big question will be what impact this will have on us here at home in New Zealand, but also what impact it is going to have on local farmers. And it's still too early to really see exactly what impact it's going to have on commodities. But two items that really do come to mind is what impact it's going to have on the currency, but also on interest rates. The New Zealand dollar has fallen around 5 cents over the past couple of days against the US dollar, and early on Tuesday morning we are trading just over 82 cents against the US. With so much volatility in the market at the moment and with equity markets falling, there's every chance that we could see further falls for the Kiwi dollar before we start to stabilise somewhat. Already we have also seen some news articles on the global media stage that would suggest that the New Zealand dollar could be a beneficiary when the dust does settle and as markets start to get back to fundamental underlying factors. The other big question is around interest rates, and we have seen a significant fall in market interest rates over the past week or two, and this does offer up some better opportunities for borrowers over the short term.